Hello, I'm Cesar Borja and I'm Portuguese, so you're gonna have to excuse my poor English skills. But I'm here to make a brief technical and fundamental analysis on SOHU, and let's start by the charts. This is the chart since the IPO. It had this incredible bull run here, and when the market was still declining, the S&P 500, this stock rose 40 times, 40-fold here, unbelievable. Then it came off more than 50%, and it has been trading sideways lately, sideways to higher, and it just break out to a new 52-week high, more than 52-week. This is a 3-year high. And let's check the short-term chart. The stock closed above this important resistance level of $29.43 with volume above average, as we can see here in the short-term chart. It was ascending moderately, but we had this very big white Morobozu on Friday, even though the market declined a lot on that day because of an analyst upgrade. I'm not a big fan of the reason for this huge bull move, but it happened, and it had a great volume of more than 2 million shares. So the short-term trend is definitely bullish. Let's check the fundamentals using my valuation model, which is a model for the next 3 years, and let me explain how this works very briefly. Well, these yellow lines are known facts, and these white lines are my estimates. They're just 4, and the dark yellow lines are calculated by this Excel spreadsheet. And we have, what do we have here? We have the initial share price, which is $29.87. As everybody knows, the initial share count, which is 36.83 million shares, and the share count has remained more or less the same over the years. You can check that at this MSN Money link, which I find very useful. You can see here, look, in 2004 there were 36.4 million shares, in 2005 36.7 million, and in 2006 36.6 million, and now 36.8 million. So it has remained very stable, so I've considered the dilution factor of 1, which means I expect the share count to remain more or less the same. And initial revenue, this is the 2006 revenues. They were $134 million, and I expect revenues to grow 22% a year going forward. That has been the historical rate. Look here, let me just put here S. Okay, and just a second. Okay, there were 80 million in revenues in 03, 103 in 04, 108 in 05, and 134 million in 06. And these revenues are growing at 22% compound annual growth rate, so I've considered that will continue more or less the same over the next three years, and that's what I have here as my revenue case. Analysts are expecting, let me see here at Yahoo, analysts are expecting 156 million, so 156 divided by 134, well, just a second, 156 divided by 134, well, 16.4% for 2007, and let's check here, 212 divided by 156, and 12 divided by 156, and 35.8% for 2008. So I guess 22% seems reasonable to me. Okay, where is this? Okay, 22%, and this gives me a final revenue of $243 million for 2009. Analysts are expecting 212 for 08. And initial net profit margin, this is the net profit margin the company had in 2006. It was 18.7%. I believe this may expand a bit to 20%. This is the historical net profit margin. And this gives me a final net income estimate of 48.7 million, which divided by the final share count of 36.8 million gives me $1.32 of earnings per share estimate for 2009. Other analysts are expecting, let me see, $1.06 for 08, so I guess $1.32 is reasonable for 09. If we apply the earnings per share multiple estimate of 37.54, which is the industry average, look here, you can see that at Yahoo and competitors. I use always the same links, these are very useful links. And we have here the Internet Information Providers industry average PE is 37.54. So if we apply that average here, we get to a final estimated share price of $49.60. This is for late 2009, early 2007, which means the share price compound annual growth rate is expected to be about 18.4% a year, which is nothing special. Well, it is just above my minimum threshold of 16%. So I don't find the stock very attractive. 18.4% is nice, but unless the company starts growing a lot more than 22%, it will rise just about this rate, and the optimal selling price is, according to my model, $31.78. This is the price where the stock would start returning less than 16%, given this set of fundamental trends. And that's my minimum threshold, so I would sell it here and look for better opportunities. Since the stock already closed at, where is it, at sorry, got a bit lost here, at 29.87. I don't see a lot of upside from this move, and didn't like the reason why the stock shot up so much on Friday. So on a 1 to 10 scale, I give it a 7 because I expect it to rise more than double the market average, but not terribly attractive. So a 7 on a 1 to 10 scale. Thank you. Bye.